So how much of the pickup in revenue and profits that we saw was directly attributable to the tremendous volatility that we saw in the fourth quarter?
Well, I think it's undeniable that volatility certainly played a role in the fourth quarter for CME Group. You referenced the amount of contracts we did on a daily basis, which was extraordinary. It's one of the second largest quarter we've had in recent times. So it's truly amazing what we've been able to accomplish here, but it just goes to show you that people need to manage risk. And we don't know when volatility is going to come. We don't know when government policies are going to make volatility or not create volatility. And so the diverse amount of asset classes that we have here at CME really helps to the bottom line to create the contracts that you referenced, Scarlet. So yes, volatility is a component, but it's not the only thing that helps drive CME's results.
I want to ask you about the volatility a little bit more here, because you, of course, have plenty of different asset classes that you offer exposure to. Which asset class or specific risk management product do you tend to see a pickup in price swings first before it spreads elsewhere? Or is this something that's more concurrent? The volatility kind of is across the board. And I ask because I wonder if there's a leading indicator here and whether that changes depending on where we are in the market cycle.
Well, I think the obvious one, Scarlet, would be the equity markets, right? So that's just something that more people participate in, and it seems to have a greater impact with the equity component. So we are the largest derivative equity exchange in the world, so we see a lot of volatility in our equity products in Q4, as you referenced. So I would say that would be one of the indicators.
What about new products, Terry? Great to have you with us. What about new areas that you're developing? In particular, it seems as though commodities has been an area of growth for you. Is this something that you're seeing more of an area to make market share in? Is there a bit of a tussle on?
Well, Caroline, on that point, I think, commodities are something that are basically the roots of CME Group, and we continue to build on that, but we come up with new innovations for people to manage their risk. And I think what's important is, everything we're doing here is based around the client and make the experience of the client much easier, much more seamless, much more cost efficient. So that goes through all of our asset classes, including commodities. So that's a growth area for us, and it's a growth area from the retail side as we look at the business that comes into CME from overseas. Roughly 30% of the CME's revenue comes from outside of the United States today, which is a huge part of our revenue. And you're getting a lot of retail trade that participates in the commodity products out of the Asian community, especially in the gold and the silver and products like that. So yes, that is a growth area for CME Group.
You mentioned expansion, of course, overseas. The next acquisition, your big achievement over the last couple of months. Give us an update on that acquisition, of course, which does expand your footprint overseas and boost your presence across Europe. What does the slowdown in the region, Terry, particularly in the big economies like Germany, like France, mean for trading volumes in the near term? What are you seeing so far, and what do you think we might see going forward?
Well, it's really hard to predict, Scarlet, what the trading volumes are going to be going forward. But I will tell you that, the fourth quarter, the small amount of time that we had to incorporate some of Nex's numbers into our CME groups, they were very positive. So that was an encouraging sign. As you know, they trade the cash products where we trade the futures contracts. But the broker tech division of Nex, which is part of CME Group now today, very important component to the U.S. debt market. And so that has been continuing to grow. And then the EBS, or the FX market, is also growing. So this is extremely important, this transaction, so complementary in nature. As I referenced earlier, you need to make sure that you are offering your clients a whole host of services that you may not had to offer several years ago. And that's what we're doing. That's why this transaction makes so much sense for CME and its clients, and in return makes so much sense for our shareholders.
So much sense, but also plenty of changes afoot, particularly as Next had, a lot of activity in the United Kingdom. Brexit still very much front and center when you're looking at the politics that we're just seeing today. Can you give us a sense of how that change and the decisions you're making are continuing to evolve? We've just seen that you've moved a large part of your trading venues from now London to Amsterdam. Does that continue? And how do you deal with this sort of uncertainty?
I said it earlier, uncertainty is not good. The markets like clarity, Caroline, so you're absolutely right. But for CME, our European business, which would be the broker tech repo business that's being done today, which you referenced, is now going to be done out of Amsterdam. We just got approval to do that. We'll be clearing it out of the London Clearing House's Paris division of their SA division. So it's really been no disruption for CME Group or the participants on the broker tech platform in lieu of a hard Brexit. But we're going to have to wait and see. But I truly believe that the whole issues around Brexit. There's so much uncertainty there of what is ultimately going to happen come March 29th, one way or another. That's going to have an impact on markets. So people need to pay close attention to this. And I assure you, markets want clarity on this issue, Caroline.
They certainly do. Terry, I want to ask you about your overall revenue and where it comes from, because you get about 80% of your revenue from clearing and transaction fees. That is your bread and butter.
Right.
How far do
Yes.
you want to go in terms of diversifying away from that and moving towards more recurring revenue streams? Take the clearing and transaction fees maybe down to, I don't know, 60%, 50%?
Well, you know, when you have the operating margins that CME Group happens to enjoy today with our model that we've been building for 173 years, to get operating margins near 70%, that's not a bad business model to have. With your transactions being 80% of your revenue. So I would never want to say I would want to take it lower. I think we can keep that and expand our business through the market data division of this company. I've said this for a long time, Scarlet. I think that the market data that CME has and has been accumulating for years has a lot of value to it, and we're going to continue to look at different ways to package that for a whole host of different businesses in financial services and maybe even outside of financial services. So I'm really excited about the market data expansion, but at the same time, I would never want to take down our transactional revenue from where it's at today, because it's high margin business and it creates a lot of efficiencies for the marketplace.
You talk about the value in your data. Now, some of your rivals, clearly not in the futures business, but other exchanges, are coming under quite a lot of heat, whether it's from the regulated, but also their key clients saying, look, you charge too much for data. You and yourself, I mean, CME Group has a rather healthy, almost monopolistic activity within the futures market. How do you ensure that you're treating clients well? Have you seen regulators come to you in any way?
No, regulators have not come to us in any way. I think what you're referring to, Caroline, is the argument that you're hearing from the SEC side of the equation with the securities exchanges. We're regulated by the Commodity Futures Trading Commission. They have not talked to us about the market data. There's a whole host of things that goes into market data. Caroline, we didn't charge for market data just up until a few years ago. But this is very valuable information. I know a lot of participants say that the data that they're putting in there is their data, so why are they paying for it? Well, technically they're not. They have their own data. What they're paying for is a whole host of data which we facilitate, and there's a cost associated for CME to aggregate all this data from millions of participants around the world to decide what the price discovery of that particular product is at that given moment in time. That's extremely valuable data. So I think there's a lot more to it than what we do versus the data of IBM stock or even CME stock for that matter.
Fair enough, but what do you say to your customers? How do you tell your biggest customers that you want to keep them happy? How do you ensure that you keep them happy without alienating them as you do charge them for that data?
It's the biggest focus I have here, Scarlet, is being very focused on the clients. And I believe as long as I keep bringing value-added propositions to the equation, then the clients will be happy. I mean, I can't ensure they're going to make money or they're going to lose money, but what I do want to be able to do is to have the most cost-effective risk management platform in the world, and that's exactly what we do. We don't skimp on any of the oversight proposals. There's a lot of cost that comes into running these businesses, and there's a lot of value added for the clients. So I think that the execution charge is the cheapest part for the client. We got to make sure we keep those tight bid offers of liquidity. That's really where the client's costs go up dramatically when the spreads widen. So I think we add a lot to the value proposition of the client. And again, everything I do, if I don't have a value added, then we don't do things because we can. I'm not a big believer in the Me Too strategy because you can.
Got it. I have another question here in terms of your data. Would the CME ever consider publishing its own commitments of trader data the way that ICE Europe does? Because we've seen how CFTC data had been delayed during the shutdown, after the shutdown. I'm wondering if more exchanges will try to distribute their own data in the future.
You know, what the future is going to be about distribution of data is yet to be determined, Scarlet. Right now, as you referenced, it does come from the Commodity Futures Trading Commission. There are regulatory requirements as it is associated with that, but we are constantly looking at ways to increase the value of the data for the participants for their use.
You obviously offer the chance to be able to gain some exposure to Bitcoin in particular. And I want to get your take on institutional demand for this at the moment. Interestingly, we've got news that JP Morgan is looking at unleashing their own coin. This, of course, is for their own internal transactions. But Is institutional demand there? Is it rebounding? Is it hitting some sort of bottom, Terry?
You know what, Caroline, I'm not quite sure. You know, I was a big believer that we needed to go forward and list Bitcoin in some way, shape, or form, but also understanding this is a brand new asset class that has come into the marketplace, so you need to be able to walk before you run. So we put a lot of controls that we don't have on certain products on Bitcoin. So I think that was important. So the bottom line is, I think until governments really start to accept cryptocurrencies of some way, shape, or form, it's going to be very difficult for the major commercials to come in here and really get gung-ho on Bitcoin or any other cryptocurrency. So we'll have to do a wait and see. You know, I think JP Morgan's done a little bit of a, I don't want to say an about face, but they were very, I would say, pessimistic on the whole Bitcoin idea a couple of years ago, and now they're coming up with some offerings. Goldman Sachs on the same way. So I have to think we have to do a wait and see, but I really think the key to the success of any currency, whether it's fiat or crypto, is going to be associated with the government. So I think the government needs to be more involved.